Essentially, I guess what our goal is throughout the years we've known each other is to try to politely, right, with evidence, and and we've changed each other's minds on many things, is to try to tighten up our investment principles. Wouldn't you say that, Dylan? Like trying to figure out where we're not looking.
Yeah. I think we kind of complement each other. I mean, I think we're both have a pretty good track record. You haven't shared your exact percentages, but I know my track record percentage wise in the last, guess 10 years of investing has been, really good. I've really had a lot of good years. Only like one bad year that I can speak of. Gold, ironically enough. So yeah, that's funny enough. But yeah, I mean, I'm always willing to change my mind if I see some evidence. It's happened a lot in my life where I just assume, hey, trees are green, and then, one day someone shows me a tree that's not green. Then I go, oh wow, I guess trees are usually green. My bad.
Well, I don't know if you know, and I'm getting a little bit off topic here, but I don't mind. It's the same thing to say black swan event, right? Like black
Yeah.
swans were kind of seen as not existent, and then all of a sudden, black swans existed, and
There you
nobody
go.
really knew. So yeah, I mean, just that was just a little bit, about each other. Oh yeah, another reason why we're doing this is because Dylan and I have chronicled all of our investments for at least the last 365 days, and we just want this to be public so we can have this open because we are. I can speak for Dylan. This we're not against criticism. We want different ideas on anything. We're looking to get different ideas. Look for different ways for doing anything. Um, and essentially, it's just to make more money in your pocket, right?
Yeah, exactly. That's one thing I definitely have tried to bring to the table is like, who cares who's president as long as you know how to make money, because that's the important thing, regardless of
Absolutely.
what's happening. Exactly.
Absolutely, absolutely, and as you get a little bit over this podcast, we'll touch a little bit on that subject, but not today. Now, okay, so the other thing we wanted to go at was
Well, I want to add one thing
go
here,
ahead, go
Chris,
ahead.
that
Yep,
we both have regular jobs, but our part-time investing makes us more money than our job, at least
yeah,
from what I
yeah, right,
understand. You
right,
haven't given
right,
me
right. To not
numbers,
get
but
into too
like
much, yeah, yeah, to
we're
not
like
get
in
into too
that sort
much,
of
yeah.
transition zone of like, wait, why am I going to work again?
Well, to not get into too much detail, but yeah. So our investments have been good enough to that we can be somewhat comfortable. Let's just say that. Let's just say that without getting into too much.
Personal, yeah.
Is that our main goal is to beat our main bench line is three different bench lines, and this actually great. Thank you for telling me. Dovetails us into our next thing is that at least I have three main bench lines is the S&P 500, which normally um, gets you between 8% ish cash, and also whatever you get on that cash, which is interest rates per year on that cash. So, give you an example. We're always trying to be 8%, which I think I can see Dylan's portfolio. We've done that for multiple years. Um,
We
uh,
don't have the Warren Buffett track record of like 60 years, but
yeah,
give us
well,
60 years and we'll get there.
yeah. We're not even 60.
Hopefully.
Right. We're not even 6 years old. So, and Dylan, feel free to jump in here, because I don't want to do all the talking. But and then the other thing was like I said, whatever you're getting interest rates on your current dollar. So, uh, for all you guys who are a little bit older, interest rates have been all over the place. But the last 20 years or so, until maybe about 4 or 5 years, we were dealing with 1-2% interest rates. So that wasn't, you weren't getting much on your bank. You weren't getting much on your savings account on that time,
Cash, yeah.
right? So that would make that bar significantly lower, but you are getting something, right? With that being said, and we can get into more of this, is you got to make sure you got to make sure that inflation isn't so much that it eats that away. But we'll get into that a little bit later. And then the third thing is just cash. Cash. You don't. I mean, the first rule of investment is what, Dylan? Don't lose
Cash is
money.
trash.
Well, yes, yeah, or don't lose
Oh,
money.
the real rule. Yeah,
Yeah,
yeah.
yeah, yeah.
Rule number one
Don't.
is don't lose money, and rule number two,
Yep. Cash is
me
trash.
again. Okay, cool. I was gonna
Cash
say
is
I was gonna
trash.
give it to you, but rule number two is don't forget rule number one.
Yeah. Hey, oh,
That's
hey,
Robin's.
I like that. I like that.
Yeah,
So
yeah, that's the famous Warren Buffett
yeah,
line.
yeah, and guys
Uh,
and guys and girls. I mean, you're always going to see our Warren Buffett principles going in this because, um, you know, I believe and Dylan and I have you speak on this a little bit, Dylan. Is that I in my heart I think Warren Buffett is one of the best investors of all time. Just because of his principles, et cetera, and just his track record of investing from the 50s. And Dylan, you can kind of I know you've done some reading up on that. You want to expand on that a little bit?
yeah, sure. Documented. I mean, there may have been a investor in the 1800s or whatever that has a documented track record, but as far as I know, and as far as the field knows in terms of recorded track record for X period of time, where luck is essentially not mathematically not a factor anymore when you figure over the thousands, if not tens of thousands of investment decisions Warren Buffett has made. You can attribute maybe some of those to luck, but you can't attribute all of those to luck, obviously. And you look at his track record against the S&P 500 overall market, and you can say it's statistically impossible that he would just happen to be lucky. He just rolled over one time and just point on the newspaper and buy that, and then it went up, and then he did that like 800,000 times. That's just not going to happen by chance. So he's got the highest bar of public record that we know. The 20 whatever percent depends on what year you look it over, but that 60-year time frame is roughly 60-year time frame is the best. He's the gold medal. He's the best in the world essentially, as far as we know. So he's a good point to have a reference to whenever you're looking at your investment returns and all that kind of stuff. So yeah.
Yeah, and we're not. By the way, we don't work for Berkshire or anything. Well, it is just we're not.
No,
We're not.
no.
Yeah, we're not. We're not going for his buck or whatever. It's just somebody that we really appreciate and we, as Dylan said, see as the standard of of investing.
Yeah, for sure.